In alternate exercise 4.1, we're presented with some basic income statement information in 5 different scenarios, and we're asked to fill in the blanks, which are the cells highlighted in yellow. And this really tests out how well you understand the relationship between these various figures. So I'm going to look only in this video at scenario A to give you a little bit of practice. And again, this tests out how well you understand different relationships. I'm going to start out, we look and we show merchandise inventory beginning, cost of goods purchases, and also merchandise inventory, cost of goods sold, and think about how those various figures relate, because it appears that we have one of those that's missing, which is merchandise inventory. So let's think about how the book talks about how they relate. It mentions that the cost of our beginning inventory, so what we started out with in terms of inventory, plus net overall cost of our purchases. And if I add those two up, that's what the cost of goods I would have available for sale, what I started with plus what I added in. Well, that's going to be equal to a combination of ending inventory. So we're either going to have it left as cost in our ending inventory, or we're going to sell it and it's going to become part of the expense cost of goods sold. So it makes sense. What I have available, I'm either going to have it left in ending inventory or I'm going to sell it. So what we can do is use algebra to move these various figures around and start to fill in the holes of what we know and figure out what we don't know. Beginning inventory we have listed as 4,000. Then we have net purchases of 47,000. So ultimately, if we add 4,000 plus 47,000 together, we would have $51,000 worth of inventory available to sell. We don't know what our ending inventory is, but we do know that our cost of goods sold is going to be 45,000. Again, using the power of algebra, let's move this around and get on our numbers on the left-hand side by subtracting out our $45,000 of cost of goods sold from our beginning inventory of 4,000, our net purchases of 47,000. If we subtract out our cost of goods sold of 45,000, we can get that our ending inventory is $6,000, so we can fill that in. You may question, why in the world did you fill this in as a negative number? Parentheses seem to indicate that it's a negative number. Well, let's think about this and go back to our original formula. Beginning inventory plus net purchases have to equal the combination of what we have left in ending inventory or the cost of goods sold. So if we move this around, beginning inventory plus net purchases, if we're trying to figure out what cost of goods sold is and calculate it, we would actually subtract ending inventory from it in order to get cost of goods sold. So what I have available to sell, if I subtract out what I was left with, I can back into what the cost of goods sold is. That's why we show ending inventory as a negative amount. Then we start to look at some of our other blanks. For example, gross profit. Now let's think about what's the formula for gross profit. Gross profit's something new to this chapter because we're a merchandiser. Now we have cost of goods sold. And gross profit's also called gross margin. It's simply sales minus cost of goods sold. We're trying to get some idea of how our sales, how much of that was used to cover the cost of the items that we have sold, what's left over to cover those other expenses within the business. So if I start to go back and fill this in, $57,000 worth of sales minus cost of goods sold of $45,000 already given means my gross profit is $12,000. So this is starting to fill out nicely. I'm starting to fill in the blanks here. One last blank that I have listed is going to be net income. So let's think about this. Net income, we look into this, is going to be gross profit. So what I had left over from my sales after I covered my cost of goods sold, minus any other expenses in our business. And we'll talk about that more when we get to the multi-step income statement. So gross profit we just calculated of $12,000 minus our other expenses of $4,000 is going to give us an overall net income of $8,000. So I've ended up filling in all the blanks within here. I'd recommend working through these different formulas and these different relationships of inventory, gross profit, and net income. And you might have to use algebra to rearrange them when you're filling in the blanks for these other areas, but utilize those and back into your various calculations.